I was feeling so much tension at the end of last year. I actually, when I look back on Q4, it was probably the most difficult quarter of my professional life. So in 2018, it looked like there was going to be inflation, and Powell tried to get ahead of it, and he raised rates, and the market completely collapsed. And they were looking, I think, at Chinese data at the time, and it looked like, China was turning, going crazy. Then China completely turned over. It was a complete head fake. The economy wasn't rip-roaring. Inflation didn't exist. And they basically just curtailed a lot of investment and destroyed a bunch of value. So this time around, I think they're very sensitive to not correcting too quickly. But then the opposite thing happened, which is they probably waited a little too long. And now, we're correcting too slowly, too late into the cycle. And we're just sort of digesting that reality. And so I think that, we're probably, to be honest with you, we've puked it all out for the most part, in my opinion. You have to remember, right? The big difference between now and even 10 and frankly, more importantly, 20, 30, 40, 50 years ago is how many computers are involved that trade, how much passive money is involved that owns assets, and how much of this stuff is sitting on the sidelines still in money market accounts and munis. So if you look at those markets, there is a ton, trillions of dollars waiting to find a home. And what we've now done, and Brad's charts show this, is we've basically chopped the head off of all of these fast-growing growth multiples. The underlying companies have not changed one scintilla, right? These companies are still growing by crazy amounts. Like Snowflake is still an incredible business.
Unbelievable.
But the multiple that one was willing to pay has been very much re-rated, as is a bunch of other companies.
So let me ask you a question, Chamath. If we've gone from these 50, 60, 70 multiples times sales, and now it goes back down to 20, is that, dare I say, a buy signal? Well, and will those trillions of dollars start moving back in? Because who wants to be in a money market?
I don't know, and I can't really call these things. But a really smart person that I talked to this week, he actually liquidated everything in October and November. And I don't know, we talked about this on the pod, but I was feeling so much tension at the end of last year. I actually, when I look back on Q4, it was probably the most difficult quarter of my professional life in just trying to manage risk. And I exited a ton of positions. All my pipes, my third-party pipes, I basically sold off except for one. I generated some liquidity in other places as well. I was glad that I did that, in part because I saw, what he was doing, and in part because, Jeff and Elon were selling. And I thought, this is crazy to sit on the sidelines and, be the bag holder here. Going into Q1, I talked to the same guys, and what he said to me, which I think is very smart, is you have to really look at the first and second derivative of the 10-year bond. Because when that stops moving, like the 10-year bond is this beautiful barometer of the collective wisdom of every single investor in the world about what they think about long-term growth and inflation. And it's a really important market. We've talked many times, look at the 10-year break even if you want to understand where inflation is going. We started to talk about that 7 months ago. And if you look at that, the rate of change, so the volatility in the 10-year yield is slowing way down. And if that continues to hold, that means that people are really saying there's a small amount of real inflation, a reasonable amount of transitory inflation, and we're about to kind of wash most of it through the system with, 100 basis points of rate hikes. And if that's the case, then you may see a quick pullback, in Q1, and we're back to the races again because of all this other money that's going to say, I got to get back in. And if you look at all these corrections in the world of computer traded algorithms and ETFs and passive money, and it's all, the snapbacks are so fast. You correct 20% and then whoop, you whip it back and you go. So I don't know. That's one view based on the past. But
when you have these big swings, remember, it's not that every issue moves perfectly in sync with every other issue. So there are these, call it over adjustments that happen within a cohort. So within a group of companies, some of them will trade down much farther than others. The multiple will compress much further than others. And there's certainly opportunities within, as there is in any market that's moving quickly, to find businesses that now are priced as mature, non-growth value businesses, and they're profitable and growing. And there's a bunch of those out there now. And that wasn't the case a month ago.
I don't think a single thing in the last quarter has changed in the underlying fundamentals of the majority of businesses that are public. And I actually think for the most part, nothing has really materially changed for the majority of private companies. All that's changed is what you're willing to pay in the future for it. And the one thing that hasn't changed is what you're willing to pay in the future for the private businesses.
I guess my big prediction for business losers this year were asset classes that were highly dependent on liquidity. You guys predicted crypto would be one of those. Clearly, it's taken a massive hit. Have you seen how much the crypto markets are off just in the last week? So it's...
so much for them being uncorrelated.
No, it's highly correlated. Look, the crypto markets...
saying Bitcoin's going to be uncorrelated, so the market's going to go down.
The crypto markets are like a sponge for liquidity, and the more liquidity there is out there, the more money can flow into a more speculative asset class. But look, my objection to this, is that if you look at the Fed's actions, I think Chamath is right that they waited way too long to react. And during the crisis, they overreacted. They pumped. We on a previous pod, we showed the assets.
They vacillate between underreaction and overreaction.
Yes, exactly. Yeah. And now they're going into overreacting again. Yep. I actually think they nailed it in mid-December. They nailed it by giving us business certainty around what the new rate environment was going to be. And just 3 weeks later, in the minutes to that very meeting, they completely undermined the certainty or the greater level of certainty and predictability that they had provided markets. They've now introduced massive uncertainty. So it's unbelievable.
It's like they're pilots and they stalled the plane and then they're like, oh, let's pull back.
Well, no,
stall it some more.
They're kind of pulling out the manual and learning in real time.
Yeah. And it's like, you need to just point the nose down a bit and add a little bit of speed so you get some lift. It really is tragic.
The performance of our government at every level since COVID at the last, since 2020, it's been abysmal. First you have the self-inflicted wound of lockdowns. The economy was going to take a hit no matter what because highly at-risk people would have stayed home and reduced their economic activity. But instead of just protecting the at-risk people, we had to lock down the entire economy. We padlocked Elon's factories and on and on. So we basically shut down the whole economy for no reason. And states like California kept it going way longer than they had to. So then the government just prints like 5-6 trillion and the Fed doubles the size of its balance sheet. And overnight. Then now they're abruptly getting off drugs. Look, they put us on drugs and now they're going cold turkey. And so I think there's actually a much greater risk now of the economy going into recession this year because of the Fed's overreaction this week. They had the Goldilocks scenario down about 3 weeks ago, and I think they're going to tank the thing now, or there's a much greater risk of that.
But here's the thing, what's shocking to me. It's I don't understand why people think you can grow infinitely forever. It's just not true. Even the best businesses in the world after 15 or 20 years are barely growing at 20%. People forecast Facebook and Google. Those are the two best businesses in the world.
But isn't the question what kind of growth VCs are willing to finance?
No, what I'm saying is if you know that your terminal growth rate, if you are one of the best companies ever created ever, is 20% in 20 years, it doesn't take a genius to do a line of best fit between now where you're at 100% in 20 and realize that at some point, if you don't figure out how to make money by selling what you're selling, there's a lot of people who will be smart enough after enough historical data has come through the transom or come over the past to realize that these things are not that fundable. And this is what's shocking to me. It's like that data is hiding in plain sight for anybody to look at. It doesn't make sense unless you believe that those growth rates of 40, 50, 60% are sustainable for 30 years or 40 years. We've seen zero examples. And you have to look at these canaries in the coal mine because if the best companies in the world can't do it, you have to really scratch your head here.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70. In the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.